silence, please all rise.
Morning, be seated.
Application 1 of 2021 on the Committee's own motion, 2021 State Wage Order pursuant to Section 50 capital A of the Act.
Yes, we'll take appearances, please. Mr. Intrigan, for the Minister.
Thank you, Chief Commissioner. Yes, my name's Brendan Intrican and I represent the Minister for Industrial Relations in these proceedings.
Thank you very much. Mr. Moss, for the Chamber.
Yes, thank you very much, Chief Commissioner. Paul Moss on behalf of CCIWA.
Thank you. And Dr. Diamond for Unions WA. Thank you. And Mr. Twomey for Wacos.
Yes, thank you, Mr. Commissioner. Chris Turney.
Very well, thank you. I should record that we have before us your written submissions and submissions in reply. We also have two papers from Professor Preston of the University of Western Australia, which was filed some time ago. We also have provided to you earlier in the week two research papers before the Fair Work Commission, research papers 3 and 4 of 2021. We've just provided those to you for information purposes and invited submissions if you wish to make submissions upon them. But of course, the content of those papers shouldn't be considered to reflect the views of the Commission and Court Session, of course. Now, in terms of the order of proceedings, I believe we're going to hear from Mr. Christmas first in the usual way. Is that correct, Mr. Intrigan?
That's correct, Chief Commissioner.
Very well. Well, when you're ready to proceed, please, Mr. Intrigan.
Thank you, Chief Commissioner. If it pleases the Commission and Court Session, we'll begin with the usual presentation by our expert witness from the Department of Treasury, who will present on the outlook for Western Australia. This will be followed by an opportunity for questions, and then I'll briefly summarise the Minister's position as outlined in the submission and submission reply, and also respond to briefly to some of the other parties and their positions. If it pleases the Commission and Court Session, we'll now call Mr. Christmas to the witness box.
Yes, thank you very much. Mr. Christmas, if you'd please come forward. Thank you.
Please state your full name and address.
David Bryan Christmas, and I work at 28 Barrack Street.
Do you sincerely declare and affirm that the evidence that you shall give to this Commission shall be the truth, the whole truth, and nothing but the truth?
I do.
Be seated, please, Mr. Christmas. Thank you very much.
Thank you.
Yes, Mr. Intrigan. We have a witness statement from Mr. Christmas.
We do, Chief Commissioner.
You
yes.
seek to tend to that?
Yes, Chief Commissioner.
Mr. Christmas, I'll just refer to your statement that was made on 11 May 2021, and you swear the content to be true and correct.
Yes.
Thank you very much. The witness statement of David Christmas will be tendered as Exhibit Minister 1.
Thank you.
Okay.
Over to you, Mr. Christmas.
Thank you. Thank you. The presentation today is based on an assessment of the short to medium term outlook that was presented or tabled, well, actually published on the 8th of February in the pre-election financial projection statement. For comparative purposes, the presentation will cover elements of the 2021-22 Commonwealth Budget released on the 11th of May and the 2020-21 State Budget released in October. And you'll recall there was a late budget last year because all governments made a decision to delay the budgets to get some more clarity on the economic outcome. As noted in the pre-election financial projection statement, the West Australian economy has navigated the COVID pandemic well. This reflects a combination of factors. Efforts to suppress the virus have been successful, with very few cases since last April of community transmission. Strong policy support from the state and federal government and the Reserve Bank, and ongoing demand for the state's key commodity exports. The structure of West Australia's economy and developments in its major trading partner, China, have also helped the state weather through the pandemic. Notwithstanding the state's performance today, there are some sectors that are finding conditions challenging, and the potential for a further substantive outbreak of COVID-19 remains the largest risk to the outlook. While the unwinding of fiscal support such as JobKeeper is a risk, experience to date suggests that this has not had a mature. So that's the basic sort of outline of what I'm intending to talk about. Just going briefly to the global context. In April 2021, the IMF issued its World Economic Outlook, and that estimates global activity contracted by 3.3% in calendar 2020. The IMF is then expecting growth to increase to 6% in 2021 and 4.4% in 2022. And it notes that it's upgraded its forecasts from earlier. Its previous World Economic Outlook was in October, and part of the reason is the additional fiscal support that's being provided, and also the vaccine rollout in many countries have started between the two outlooks. So importantly, WA's largest trading partner, China, grew by 2.3% in 2020, and really one of the very few countries that actually grew last year, and that's because it contained the virus outbreak well, and because of its stimulus measures. In fact, reflecting those stimulus measures, we actually have very strong commodity prices. Because not only China, governments around the world have stimulated their economies, and that usually is commodity intensive. It's often in infrastructure, which is commodity intensive. And so we've had very strong support for commodity prices. In addition, we've benefited still from Brazil still not getting back its sort of iron ore exports to where it had previously. So we actually have very high iron ore prices, and today they're around $215 per tonne US, which is very, very high.
It's gone up $2 in a day. I think it was 213 yesterday. It's moving all the time.
It is moving all the time. We actually do think that it's got potential to fall very rapidly if once China's stimulus unwinds and if Brazil increases its output. So next year we've got a estimate of around the $65 mark, which is
back to a normal trajectory of pricing.
Yeah. So after falling quite to a I think 11-year low, 17-year low, it's there. In April 2020, the Aussie dollar's picked up against the US dollar, and it's basically been around the 77 cent mark since the start of the year. So the national budget was released recently, and that basically shows the Commonwealth's assessment of the national outlook. The Australian economy actually contracted by 2.4% in calendar 2020, and that largely reflects the downturn in the June quarter, where activity declined by 7% in one quarter. And the March quarter actually last year fell slightly as well, and by 0.3%. In the budget, the Commonwealth's expecting GDP will exceed pre-pandemic levels in the March quarter 2021, following those strong rates of growth in the last two quarters, in excess of 3% in both quarters. Real GDP is expected to grow by 1.25% in 2021, with the outlook for robust rates of growth through the forecast period. And that's supported by ongoing momentum, the vaccine rollout, continued fiscal and monetary support, both for households and through new dwellings, and business through business tax incentives and the like. And also high commodity prices are supporting things.
I noticed there's a very big jump. It's Christmas in 2021-22, the forecast. Is there any particular reason for that, do you know? And then a fall back to 2.5% in the following year?
I expect that will be a recovery in household consumption.
Yeah, flowing through into that.
Yes,
that year.
yeah, it takes as things open up.
Fair.
Yeah. The strong employment growth has resulted in better labour market conditions than expected, with the recovery assisted by JobKeeper maintaining connections between employer and employees, with the RBA, Reserve Bank of Australia, estimating that JobKeeper saved 700,000 jobs at the height of the pandemic. The strength of employment growth through two transitions of JobKeeper suggests that final unwind of JobKeeper should be relatively smooth, according to the Commonwealth Treasury, and that seems to be the case. The unemployment rate is expected to average 5.5% in this quarter, and to fall to around the Commonwealth's latest estimate of the natural non-accelerating inflation rate of unemployment of around 4.5% in the later part of the forecast period, which is supporting stronger growth in wages and prices in those out years. The Reserve Bank has lowered its target cash rate once since the minimum wage case decision last year. In November, it reduced the rate from 0.25% to 0.1%. With the RBA has just maintained that as 0.1 in its May decision, and in announcing that, it's also indicated it will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. For this to occur, the labour market will need to be tight enough to generate wage growth that is materially higher than it is currently. This is unlikely to be until 2024 at the earliest. It's not the only mechanism that the RBA is using, but obviously it's the key rate. In terms of the West Australian economy, after conditions in WA's economy were beginning to strengthen in early 2020, but that upward trajectory was derailed by the outbreak. The state's domestic economy, as measured by state farm demand, contracted by 6.2% in the June quarter, the largest quarterly decline on record. So why I'm presenting the domestic economy and the goods exports is we don't have quarterly GDP or GSP data.
GSP, yeah.
So household spending declined by 11.1%. After partially recovering with strong growth of 5.5% in the September quarter, SFD grew by 1.5% of the December quarter. So as a result, the level of activity in the state's domestic economy was 1.2% higher in the December quarter than in the December quarter prior to the onset of the crisis. Merchandise exports have been a bit lower than pre-COVID for much of last year. That reflects a number of things. So, for example, there was a Cyclone Damien impacted on iron ore exports. One of our very big LNG producers had to do work on one of its big plants, a number of bits of work actually. Agricultural exports were a little weaker because the production in 2019-20 was lower, so a combination of those things. But it's picked up 11% in the December quarter to exceed pre-pandemic levels as well. So turning to household consumption, which is where the impact was felt largest, as I mentioned, it declined by 11.1% in the June quarter last year. Spending subsequently recovered in the September quarter by 11.7% and December quarter by 0.3%. However, spending in the December quarter was still 1.6% lower than in December 2019. So it's still got a bit of recovering to do. But there's a lot of information in this chart, but this is just a highlight where some of the biggest declines were. So health spending, and that includes allied health, so it's not necessarily Department of Health spending, and this is personal spending as well. Operation of vehicles, because we were using vehicles less in that quarter. Where we should have had an arrow, we sort of tried to highlight it with arrows, but the biggest one actually is transport services,
Yes,
and that includes international. Yes, a huge fall, and it hasn't recovered. And hotels, cafes and restaurants, you can see that fell, and it's come back a long way, but it's still in the December quarter hadn't quite reached its previous level. Retail spending within the state has been high through the pandemic, and part of that's been supported by stimulus measures and the redirection of interstate and international travel spend to spending in WA. And while retail trade's been high, there are, as the Commonwealth will notes in its budget, spending on services has been weaker. So you've got a bit of a trade-off.
A shift to
as well.
goods rather than
Yes.
services, yes, of course.
Yep, yep. However, household savings, so given the unprecedented support and the limited, the constraints on spending, their households have actually been able to improve their savings. So the saving rate has sort of picked up by about 5 percentage points in Western Australia, and a little bit more, 6 percentage points nationally. So it is saying households have had a higher disposable income, including because of JobKeeper and the Job Seeker supplement, but they've been using it wisely in a sense.
Sorry, Mr. Christmas, going back to household consumption and retail trade, there's also material to suggest that consumer confidence has been recovering.
Yes.
In the last 2 quarters particularly.
Yes. It actually recovered very quickly, and it's been...
Even in the last quarter of last year especially.
Yeah.
But presumably that's driving some of the consumption improvement and retail spending as well. Households feel more confident
Yes,
to spend.
That's correct.
And of course they're not spending by travelling overseas or spending in that way.
Yes.
So the focus is on the domestic scene rather than other.
That's correct. Yep. Yep. Business confidence has also been... They're both very positive. So at present. Household consumption, the PFPS estimates it will increase by 1/4 percentage point in 2021, and then they'll have a larger recovery in 21-22 of 3%, as consumption lifts across all expenditure components. That does... So some of that would have been on tourism opening up. So that may be impacted on how fast international borders open up as well. Housing market has been performing particularly well. It's an area of strength, and that's largely been boosted by stimulus grants from both levels of government in our particular case. And so you've got building approvals are basically more than double their level last year. Housing finance commitments for new construction or newly built homes is sort of triple the level in March quarter 2021, triple their level of a year ago, and that's flowing through to actual on-the-ground construction. So there were 6,405 new dwellings commencements in December quarter, and that's more than double the recent low of 3,025 commencements in the June quarter 2020. So that's sort of flowing through, and this is one of the reasons why we've even upgraded the forecasts after, house dwelling investment declined by 13.2% in 2019-20, and we estimate it'll grow by 0.75 in 2021, but a big jump next year because it takes a little while for commencements.
The lead time, of course, yes.
Yeah. So obviously that's once we're then expecting it to moderate after the bonuses sort of boost.
Start tapering out.
Yeah, yeah. Business investment has held up well in West Australia, largely reflecting construction work on large backfill iron ore projects. And you can see that compared to nationally, that's been the case. And it reflects that mining investment accounts for around 2/3 of investment in West Australia, but nationally it's about a fifth. So also business confidence has been positive for most of the past year and its highest level in 10 years in the past 2 months. Investment in West Australia grew by 9.5% in 2019-20, the first time in 7 years. And we're expecting it to increase by 2.5% in 2020-21. And that's broadly consistent with an ABS new capital expenditure survey, once you adjust for inflation. Because theirs is showing growth of 4%, but that's in nominal terms. And then beyond that, we're just expecting fairly modest growth of 2.5% in 2021-22, and leading to some rates of by 23-24, 4.75%. And we've got that transitioning from major iron ore backfill projects to our expectation is there'll be some LNG work, because they do actually need some backfill work as well. There have been a range of announcements that have come through, so that should things like Waitsia Phase 2, that's a $750 million project, and there's a big lithium project that was announced by Wesfarmers that's almost $2 billion worth. So a few of those are encouraging signs of support for investment.
Business investment,
Yeah. So state final demand increased by 1.5% in the December quarter, but and we actually grew in 2020 for the state domestic economy, but by 0.1%. The PFPS, the pre-election financial projections forecast, is for domestic economy to grow by 2.25 in 2021, up from the budget estimate of 0.5. And again, that's housing consumption was a bit stronger in the second half. Household consumption was a bit stronger in the second half of 2020, and the building bonus and home builder are also part of that story. So the external sector, we actually think net exports will be relatively flat this year. Merchandise exports. That's large, and actually throughout the period, we're not expecting big.
Silence, please all rise.
Morning, be seated.
Application 1 of 2021 on the committee's own motion, 2021 state wage order pursuant to section 50 capital A of the Act.
Yes, we'll take appearances, please. Mr. Intrigan, for the Minister.
Thank you, Chief Commissioner. Yes, my name's Brendan Intrican and I represent the Minister for Industrial Relations in these proceedings.
Thank you very much. Mr. Moss, for the Chamber.
Yes, thank you very much, Chief Commissioner. Paul Moss on behalf of CCIWA.
Thank you. And Dr. Diamond for Unions WA. Thank you. And Mr. Twomey for Wacos.
Yes, thank you, Mr. Commissioner. Chris Twomey.
Very well, thank you. I should record that we have before us your written submissions and submissions in reply. We also have 2 papers from Professor Preston of the University of Western Australia, which was filed some time ago. We also have provided to you earlier in the week 2 research papers before the Fair Work Commission Research Papers 3 and 4 of 2021. We've just provided those to you for information purposes and invited submissions if you wish to make submissions upon them. But of course, the content of those papers shouldn't be considered to reflect the views of the Commission and Court Session, of course. Now, in terms of the order of proceedings, I believe we're going to hear from Mr Christmas first in the usual way. Is that correct, Mr Entrin?
That's correct, Chief Commissioner.
Very well. Well, when you're ready to proceed, please, Mr Entrin.
Thank you, Chief Commissioner. If it pleases the Commission and Court Session, we'll begin with the usual presentation by our expert witness from the Department of Treasury, who will present on the outlook for Western Australia. This will be followed by an opportunity for questions, and then I'll briefly summarise the Minister's position as outlined in the submission and submission reply, and also respond to briefly to some of the other parties and their positions. If it pleases the Commission and Court Session, we'll now call Mr Christmas to the witness box.
Yes, thank you very much. Mr Christmas, if you'd please come forward. Thank you.
Please state your full name and address.
David Bryan Christmas, and I work at 28 Barrack Street.
Do you sincerely declare and affirm that the evidence that you shall give to this commission shall be the truth, the whole truth, and nothing but the truth?
I do.
Be seated, please, Ms Christmas. Thank you very much.
Thank you.
Yes, Mr Entrin. We have a witness statement from Mr Christmas.
We do, Chief Commissioner.
You seek to tender that?
Yes, Chief Commissioner.
Mr Christmas, I'll just refer to your statement that was made on 11 May 2021, and you swear the content to be true and correct.
Yes.
Thank you very much. The witness statement of David Christmas will be tendered as Exhibit Minister 1.
Thank you.
Okay.
Over to you, Mr Christmas.
Thank you. Thank you. The presentation today is based on an assessment of the short to medium term outlook that was presented or tabled, well actually published on the 8th of February in the pre-election financial projection statement. For comparative purposes, the presentation will cover elements of the 2021-22 Commonwealth Budget released on the 11th of May and the 2020-21 State Budget released in October. And you'll recall there was a late budget last year because all governments made a decision to delay the budgets to get some more clarity on the economic outcome. As noted in the pre-election financial projection statement, the West Australian economy has navigated the COVID pandemic well. This reflects a combination of factors. Efforts to suppress the virus have been successful, with very few cases since last April of community transmission. Strong policy support from the state and federal government and the Reserve Bank, and ongoing demand for the state's key commodity exports. The structure of West Australia's economy and developments in its major trading partner, China, have also helped the state weather through the pandemic. Notwithstanding the state's performance to date, there are some sectors that are finding conditions challenging, and the potential for a further substantive outbreak of COVID-19 remains the largest risk to the outlook. While the unwinding of fiscal support such as JobKeeper is a risk, experience to date suggests that this has not had a much. So that's the basic sort of outline of what I'm intending to talk about. Just going briefly to the global context. In April 2021, the IMF issued its World Economic Outlook, and that estimates global activity contracted by 3.3% in calendar 2020. The IMF is then expecting growth to increase to 6% in 2021 and 4.4% in 2022. And it notes that it's upgraded its forecasts from earlier. Its previous World Economic Outlook was in October, and part of the reason is the additional fiscal support that's being provided, and also the vaccine rollout in many countries have started between the two outlooks. So importantly, WA's largest trading partner, China, grew by 2.3% in 2020, and really one of the very few countries that actually grew last year, and that's because it contained the virus outbreak well and because of its stimulus measures. In fact, reflecting those stimulus measures, we actually have very strong commodity prices because not only China, governments around the world have stimulated their economies, and that usually is commodity intensive. It's often in infrastructure, which is commodity intensive. And so had very strong support for commodity prices. In addition, we've benefited still from Brazil still not getting back its sort of iron ore exports to where it had previously. So we actually have very high iron ore prices, and today they're around $215 per tonne US, which is very, very high.
It's gone up $2 in a day. I think it was 213 yesterday. It's
Yeah,
moving all the time.
it is moving all the time. We actually do think that it's got potential to fall very rapidly if once China's stimulus unwinds and if Brazil increases its output. So next year we've got a estimate of around the $65 mark, which is
Back to a
roughly
normal
along-
trajectory of pricing.
Yeah. So after falling quite to a I think 11-year low 17-year low, it's there. In April 2020, the Aussie dollar's picked up against the US dollar, and it's basically been around the 77 cent mark since the start of the year. So the national budget was released recently, and that basically shows the Commonwealth's assessment of the national outlook. The Australian economy actually contracted by 2.4% in calendar 2020, and that largely reflects the downturn in the June quarter, where activity declined by 7% in one quarter. And the March quarter actually last year fell slightly as well, and by 0.3%. In the budget, the Commonwealth's expecting GDP will exceed pre-pandemic levels in the March quarter 2021, following those strong rates of growth in the last two quarters, in excess of 3% in both quarters. Real GDP is expected to grow by 1.25% in 2021, with the outlook for robust rates of growth through the forecast period. And that's supported by ongoing momentum, the vaccine rollout, continued fiscal and monetary support, both for households and through new dwellings, and business through business tax incentives and the like. And also high commodity prices are supporting things.
I noticed there's a very big jump. It's Christmas in 2021-22, the forecast. Is there any particular reason for that, do you know? And then a fall back to 2.5% in the following year?
I expect that will be a recovery in household consumption.
Yeah, flowing through into that.
Yes,
that year.
yeah, it takes as things open up.
Yeah.
The strong employment growth has resulted in better labour market conditions than expected, with the recovery assisted by JobKeeper maintaining connections between employer and employees, with the RBA, Reserve Bank of Australia, estimating that JobKeeper saved 700,000 jobs at the height of the pandemic. The strength of employment growth through two transitions of JobKeeper suggests that final unwind of JobKeeper should be relatively smooth, according to the Commonwealth Treasury, and that seems to be the case. The unemployment rate is expected to average 5.5% in this quarter, and to fall to around the Commonwealth's latest estimate of the natural non-accelerating inflation rate of unemployment of around 4.5%. In the later part of the forecast period, which is supporting stronger growth in wages and prices in those out years. The Reserve Bank has lowered its target cash rate once since the minimum wage case decision last year. In November, it reduced the rate from 0.25% to 0.1%. With the RBA has just maintained that as 0.1 in its May decision, and in announcing that, it's also indicated it will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. For this to occur, the labour market will need to be tight enough to generate wage growth that is materially higher than it is currently. This is unlikely to be until 2024 at the earliest. It's not the only mechanism that the RBA is using, but obviously it's the key rate. In terms of the West Australian economy, after conditions in WA's economy were beginning to strengthen in early 2020, but that upward trajectory was derailed by the outbreak. The state's domestic economy, as measured by State Farm demand, contracted by 6.2% in the June quarter, the largest quarterly decline on record. So why I'm presenting the domestic economy and the goods exports is we don't have quarterly GDP or GSP data.
GSP, yeah.
So household spending declined by 11.1%. After partially recovering with strong growth of 5.5% in the September quarter, SFD grew by 1.5% of the December quarter. So as a result, the level of activity in the state's domestic economy was 1.2% higher in the December quarter than in the December quarter prior to the onset of the crisis. Merchandise exports have been a bit lower than pre-COVID for much of last year. That reflects a number of things. So, for example, there was a Cyclone Damien impacted on iron ore exports. One of our very big LNG producers had to do work on one of its big plants, a number of bits of work actually. Agricultural exports were a little weaker because the production in 2019-20 was lower, so a combination of those things. But it's picked up 11% in the December quarter to exceed pre-pandemic levels as well. So turning to household consumption, which is where the impact was felt largest, as I mentioned, it declined by 11.1% in the June quarter last year. Spending subsequently recovered in the September quarter by 11.7% and December quarter by 0.3%. However, spending in the December quarter was still 1.6% lower than in December 2019. So it's still got a bit of recovering to do. But there's a lot of information in this chart, but this is just to highlight where some of the biggest declines were. So health spending, and that includes allied health, so it's not necessarily Department of Health spending, and this is personal spending as well. Operation of vehicles, because we were using vehicles less in that quarter. Where we should have had an arrow, we sort of tried to highlight it with arrows, but the biggest one actually is transport services,
Yes,
and that includes
international.
A huge fall. Yes, a huge fall, and it hasn't recovered. And hotels, cafes and restaurants, you can see that fell, and it's come back a long way, but it's still in the December quarter, hadn't quite reached its previous level. Retail spending within the state has been high through the pandemic, and part of that's been supported by stimulus measures and the redirection of interstate and international travel spend to spending in WA. And while retail trade's been high, as the Commonwealth will notes in its budget, spending on services has been weaker, so you've got a bit of a trade-off.
A shift to goods rather than
Yes.
services, yes, of course.
Yep. However, household savings, so given the unprecedented support and the limited, the constraints on spending, their households have actually been able to improve their savings. So the saving rate has sort of picked up by about 5 percentage points in Western Australia, and a little bit more, 6 percentage points nationally. So it is saying households have had a higher disposable income, including because of JobKeeper and the Job Seeker supplement, but they've been using it wisely in a sense.
Sorry, just Mr. Christmas, going back to household consumption and retail trade, there's also material to suggest that consumer confidence has been recovering.
Yes.
In the last 2 quarters, particularly.
Yes. It actually recovered very quickly, and it's been...
Even in the last quarter of last year, especially.
Yeah.
But presumably that's driving some of the consumption improvement and retail spending as well. Households feel more confident
Yes.
to spend.
That's correct.
And of course they're not spending by travelling overseas or spending in that way.
Yes.
So the focus is on the domestic
Yes.
scene rather than other.
That's correct. Yeah. Yeah. Business confidence has also been... They're both very positive, so at present. Household consumption, the PFPS estimates it'll increase by 0.25 percentage point in 2021, and then they'll have a larger recovery in 21-22 of 3%. As consumption lifts across all expenditure components. That does, so some of that would have been on tourism opening up, so that may be impacted on how fast international borders open up as well. Housing market has been performing particularly well. It's an area of strength, and that's largely been boosted by stimulus growth from both levels of government in our particular case. And so you've got, building approvals are basically more than double their level last year. Housing finance commitments for new construction or newly built homes is sort of triple the level in March quarter 2021, triple their level of a year ago, and that's flowing through to actual on-the-ground construction. So there were 6,405 new dwellings commencements in December quarter, and that's more than double the recent low of 3,025 commencements in the June quarter 2020. So that's sort of flowing through, and this is one of the reasons why we've even upgraded the forecasts after, house dwelling investment declined by 13.2% in 2019-20, and we estimate it'll grow by 0.75 in 2021, but a big jump next year because it takes a little while for commencements.
The lead time, of course, yes.
Yeah. So obviously that's... once we're then expecting it to moderate after the bonuses sort of
start tapering out.
Yeah, yeah. Business investment has held up well in West Australia, largely reflecting construction work on large backfill iron ore projects. And you can see that compared to nationally, that's been the case. And it reflects that mining investment accounts for around 2/3 of investment in West Australia, but nationally it's about 1/5. So also business confidence has been positive for most of the past year and its highest level in 10 years in the past 2 months. Investment in West Australia grew by 9.5% in 2019-20, the first time in 7 years. And we're expecting it to increase by 2.5% in 2020-21. And that's broadly consistent with an ABS new capital expenditure survey, once you adjust for inflation, because theirs is showing growth of 4%, but that's in nominal terms. And then beyond that, we're just expecting fairly modest growth of 2.5% in 2021-22, and leading to some rates of by 23-24, 4.75%. And we've got that transitioning from major iron ore backfill projects to our expectation is there'll be some LNG work because they do actually need some backfill work as well. There have been a range of announcements that have come through, so that should things like Waitsia Phase 2, that's a $750 million project, and there's a big lithium project that was announced by Wesfarmers that's almost $2 billion worth. So a few of those are encouraging signs of support for investment.
Business investment,
Yep.
yeah.
Yep. So state final demand increased by 1.5% in the December quarter, but and we actually grew in 2020 for the state domestic economy, but by 0.1%. The PFPS, the pre-election financial projections forecast is for domestic economy to grow by 2.25 in 2021, up from the budget estimate of 0.5. And again, that's housing consumption was a bit stronger in the second half. Household consumption was a bit stronger in the second half of 2020, and the building bonus and home builder are also part of that story. So the external sector, we actually think net exports will be relatively flat this year in merchandise exports. That's large, and actually throughout the period, we're not expecting big increases in exports, largely because most big producers are operating close to capacity. And their backfill projects aren't really increasing capacity, they're just backfill. So there's some modest increases built over the years, but they're modest compared to the past 10 years, for example. What you can see here is actually it's imports that are moving a bit more, and that's because household consumption we're not importing as much. Business investment is sort of, it is growing, but it's not growing strongly. And it's the services imports. We're not spending lots overseas on our travel, and West Australians spend a particularly large amount of money on their international travel each year. So as borders reopen, you're going to have this effect of imports increasing.
Some readjustment, balancing between the two.
Yeah. And so overall, after growing by 1.4% last year, we're expecting WA's GSP to grow by around 2% in 2021. And that's up from a forecast in the budget of 1.25% for this year, yep. And again, it's that household consumption and dwelling story. And after that, we're expecting it to ease off, but stay positive, obviously. It will be below sort of the 4% per annum that we have experienced historically. Population, the PFPS forecast is for growth in West Australia's population to slow from 1.5% in 2019-20 to around 0.8% in 2021 and 0.7% in 21-22. These forecasts are based on a working assumption that interstate borders would reopen from June quarter 2021, and we do have borders have sort of opened up a lot more than we would have thought they had in that working assumption for interstate ones. And there was again, I have to emphasise, this is a working assumption for the budget and for the PFPS of international borders are reopening from the December quarter 2021. So any difference in actual reopening will impact on that. The Commonwealth budget assumes that there'll be a gradual return of temporary and permanent migrants from mid-2022 and some phased program of international students commencing this year in late 2021. So that's just their working assumption. So that's an area where there's maybe some risk. What we are seeing, though, is the change in and population driver patterns. So while NOM is traditionally our biggest, net overseas migrations are traditionally the biggest driver of population growth in WA, because there's actually, that's turned negative over the period of the COVID, and however net interest rate migration has moved in the opposite direction, but not by quite as much. So it's good to have some sort of offset.
It's an offsetting of, of the.
Now these numbers and charts here were prepared before today's release, but the story is unchanged in a sense that what we're seeing, there's a large decline between February and May last year, and there's been some recovery the employment levels have completely recovered, even notwithstanding that since this was prepared, employment has fallen in April. Nevertheless, employment remains 0.6% higher than it was in February 2020. So that obviously would have been assisted, like the Commonwealth Government's observed with that JobKeeper. And our aggregate hours worked have followed a bit of the same path. You'll see that in February 2020 it didn't quite follow the same path, and that's because the labour market survey was conducted in part of a period where there was a lockdown, and so people weren't working as many hours as they were, but employers still retain their engagement with the employees. We have found that part-time employment actually fell more than full-time employment, but then it actually has recovered as well. And in fact, you can see that it's higher than the March 2020 levels from the chart there, whereas full-time employment hasn't had that same increase. In terms of industries, and I need to be just urge some caution in interpreting, what we've done is compared the sort of February 21 data with the February 2020 data. This is a survey that's taken in 1 month. It will have been to some extent impacted by that February lockdown.
That lockdown, yes.
This data also is probably subject to more volatility and less quality than the traditional labour force survey, partly because you're looking at a much more granular level.
More of a snapshot in a way.
Yeah. But what it sort of shows is that, between February 2020 and May 2020, the biggest falls were in accommodation and food and retail trade. Now, this year-ended chart would suggest that accommodation and food employment has completely recovered. However, if you look at the sub-industry data, accommodation and pubs, taverns and bars, for example, remain substantially below pre-COVID levels, while cafes, restaurants and takeaway services has risen above pre-COVID levels. And while the arts and rec services employment is down since last year, this predominantly is in sports and physical recreation activities, including gyms and the like. Job vacancies have recovered to their highest level in 8 years over the last 2 months. So there was a slight decline in the last month, but in the last 2 months they're still at those sort of 8-year highs. So those have been very strong, and that bodes well for continued employment growth.
Just in terms of job vacancies and labour supply this Christmas, are we starting to see, anecdotally, we're starting to see some shortages in some sectors?
Yes,
flowing
we've
into the
been
market.
hearing anecdotes like that as well.
Construction, for example, being one.
And also, well, we've heard of things like the mining industry might be
Yes.
getting truckies from the ag industry, things like that.
That's right.
Yes,
So
Yeah.
perhaps not entirely a rerun of the mining resources construction boom, but a similar trend may occur going forward into the next year or so, potentially,
But
depending on supply factors. Of
That's
course.
correct. That's correct. Yep. Yep. So employment, we're expecting the pre-election financial projections forecast is for 1.5% growth. And that was revised from the budget upwards. And again, that just reflects the same experience that we've had as the Commonwealth. We've had labour market outcomes that have surpassed the previous expectations. And then beyond that, we're sort of over the future. It's going to be around, still growing at relatively good rates. But I would say again, going back to that, below the long run or historical level. So the unemployment rate obviously clearly spiked as a result of the COVID restrictions, but has come down, and I think today's rate is 4.9%, and this has March as 4.8%. That's now been revised to 5%. Youth unemployment, that rate hasn't increased as much as it did nationally over the COVID period. That said, youth employment did fall substantially and did recover, but at the same time the participation rate fell and recovered, which is why you're not seeing as big an impact on the unemployment rate. There were some very strong estimates that even higher than ours, if you heard some of the numbers bandied around this time last year, including by the Commonwealth. But you can see from our own budget had an 8% sort of forecast for 2021. Well, that's now revised to 6.5%. And up till yesterday, for the 9 months based on data up till yesterday, we're tracking about 6.5% on average for the first 9 months. Now, with the revisions, that might be tweaked a bit, and I haven't had that chance to update that. But the part rate did fall dramatically. It fell to 65% in May 2020 as a result of the restrictions and the impact that had on the labour market. That's bounced back relatively quickly, and it's now at 68.3, and we're essentially forecasting it to remain around the 68.2, I think it is, for most of the budget period. Wages growth has been modest in WA for several years now, with annual growth in WPI remaining below 2% since 2014-15. The latest data show that WPI increased by 0.4% in the March quarter 2021, and that was released yesterday, and by 1.5% in annual average terms, which is in line with our forecast for 20. As you mentioned, Chief Commissioner, tightening in the state's labour market and reports of emerging labour shortages have yet to translate into the wage price index measure, the headline measure anyway. At the national level, there is a measure that includes bonus payments, and that actually increased more strongly than the headline rate. And we have heard of one-off payments as ways to retain people without raising the base salary rate in this sort of market.
An incentive, presumably, to keep people in jobs as the market starts to tighten.
Yes.
Generally.
Yep. But that may explain why the headline WPI rate, which doesn't include bonuses, isn't growing as fast.
Isn't moving as quickly.
Yep. So just with wages, the PFBS forecast is for wage growth to lift from 1.5% in 2021 and gradually over the period as conditions sort of in the labour market particularly strengthen over that forecast period. And then inflation. So it's been, as you can see from this chart, particularly volatile with very large movements, and those have been largely policy induced. So in the June quarter, Perth CPI 2020, Perth CPI fell by 1.2%, which is the largest decline since December quarter 1961. And it reflects a combination of policy impacts, so the introduction of free childcare, and there was, I think, a state government energy assistance credit for some vulnerable people, as well as lower fuel prices. So all those sort of contribute to it. In the September quarter, it rose by 1.8%. That was largely due to the end of unwinding of the free childcare. There was a period in that September quarter where there was still free. So but there's also been costs in this and throughout the period from project home prices, and that's because that market is so hot. So in the December quarter, we had the CPI falling 1% with the state government's $600 household electricity credit declining by contributing a 1.9 percentage point decline. So that's a very, very large impact. And so that was offset by a few other things, including that project homes and that final bit of the unwinding of free childcare. And then in the March quarter this year, the CPI was increased by 1.4%, boosted by some unwinding of the household electricity credit and fuel prices being high, plus the project homes as a recurring theme. So the Perth headline CPI rate increased by 0.6% up in the year annual average terms in the year to March 2021, with a big drag from that $600 household electricity credit. Excluding that component, Perth CPI increased by 1% in the March quarter, which was still reasonable, and by 1.5% in annual average terms. Given the extent of the impact of the electricity policy initiatives on headline CPI, well, particularly that $600 household credit, the CPI growth forecast in the pre-election financial projection statement exclude electricity component for financial years 2021 and 21-22. The pre-election financial projection statement forecast is for the Perth CPI to grow by 1.5% in 2021, and the Perth CPI is expected to increase moderately to reach the bottom end of the Reserve Bank's target range by 23-24. The March quarter result was suggests there's some upside risk to that forecast in 2021. Just to sort of finalise, and again, as outlined, the WA economy has navigated the pandemic well.
Is it fair to say broadly better than one expected this time last year?
Oh, much better, yes. Much better. With both state final demand and GSP increasing in 1920, and we were one of the few states, we were the only mainland state which actually GSP grew that year. We're also expecting both domestic economy and state economy to grow throughout the forecast period, albeit at slightly lower than long-run rates, and that's the case for employment as well. The average unemployment, we expect to come down from around 6.5% in 2021 to 5.5% by 22-23. Wage and price growth forecasts are moderate, and population growth is subdued by longer term historical rates as well. There are risks to the economy. The most significant is the outbreak of COVID in WA, which requires a sustained lockdown. So we obviously have had 2 lockdowns in the last few months. We don't think they've had sufficient impact for us to revise our GSP forecast. But there's always a risk that we'll have a more sustained lockdown, in which case you'd expect business investment and confidence would
take a hit.
Take a large hit, and
Of course.
obviously would have a substantial impact, potentially have a substantial impact on our GSP and employment outlook. Unwinding of fiscal support. So obviously the monetary policy is going to be supportive for a while, according to the RBA. But obviously, as fiscal support unwinds, and some of it has been, there's also always risks to have that transition. To date, we don't think that risk has actually materialised. So the JobKeeper, for example, in its first 2 stages of unwinding, again, doesn't seem to have had a material impact. Doesn't mean it hasn't had an impact on individuals, but in an aggregate sense. And so it's been remarkably smooth, and so the evidence would suggest we're not going to have a large one, but there's always a level of risk.
One would assume that if the tapering, well, there were 2 phases, of course, of the JobKeeper late last year, early this year, and the cessation of the program end of March this year, that if, as some were suggesting, businesses were being propped up on a widespread basis through the economy by JobKeeper, on its winding back and on its cessation, there'd be large-scale insolvencies. But we don't seem to be seeing that yet through the figures, from what I can see.
Yeah. So there was 2 things that happened. Households have got stronger balance sheets, which will enable them to keep spending a bit, which will sort of help with demand for businesses. But businesses themselves, some of them benefited from those programs, and in some cases their balances actually improved as well. It's hard to know, and that data we have is national data. It's not state level. But if that improvement is general, that will support a smoother transition than otherwise.
The indicators appear to be positive at this stage.
At this stage, yes.
And perhaps it may take another quarter or 2 for the true picture to emerge, potentially.
Correct. And even today's labour force data, I spoke to the head of the labour force area, ABS, and his position is there was no discernible impact of the removal of JobKeeper in the April data, but obviously he wasn't prepared to say none.
Of course.
But no discernible impact, and it doesn't mean that wouldn't. It's only just ended.
Yes.
So we are requiring that lift in, and it has been happening, the lift in the private sector sort of employment to replace the JobKeeper and JobSeeker, and that does seem to be happening. Obviously, a global recovery that's slower than expected, and potential, that could potentially impact on things like our commodity prices. So far, we've benefited really well, but if as they unwind their own fiscal support in other countries, and particularly if it happens in China, that may lead to a reduction in those prices and rapid. And there's always a potential for that to have an impact. And I suppose the potential for a prolonged period of negligible migration because of the timing of the borders is uncertain still. International borders, that does mean that there's some uncertainty as to when net overseas migration resumes, and therefore
Provide
the
a
outlook
further
for
boost to
demand.
the
and
economy,
things. Yep. So those are some of the sort of challenges. There are certainly risks to that outlook. And that ends my presentation. So
Thank you very much, Mr. Christmas.
thank you, Chief.
Are there any questions of Mr. Christmas? Mr. Moss?
Yes, thank you, Chief Commissioner. Just a couple of Mr. Christmas, thank you very much once again for your presentation and the large amount of information that you provide to thank you to the state wage case each year. We certainly do find it very helpful and insightful to have that information. So thank you. You've mentioned with CPI, you identified that there's been significant level of variation in that from the quarter to quarter movement. The RBA has identified that notwithstanding the volatility, underlying inflation is still sitting quite low. Is that Treasury's view as well?
I would say it's the RBA. I wouldn't have any dispute with them.
Thank you, Mr. Christmas. You've also mentioned with the lockdowns that we had in January, February of this year, and also April as well, that your expectation that it has a limited impact on GSP. Our take on that is that the lockdown or the restrictions that were put in place protected a number of key industries, particularly the mining construction sector, to a lesser extent manufacturing, and in isolating those key industries from the vast bulk of the lockdown or restriction provisions, it's allowed those to continue on trading in a much closer to normal capacity than a lot of other industries. Would it be correct, or would Treasury's view be that in the way in which the lockdown and restriction requirements have been established, that has allowed GSP to be largely unaffected?
The continued operation of mining throughout the whole period has been, including those lockdowns, has been very supportive of the recovery and GSP growth. Yeah.
Thank you. And based on all the predictions and the strength of the mining sector, would it be a reasonable conclusion that had mining not been performing as well as it has been, and we're in a fortunate position it has, and that we didn't have the same level of government stimulus, that our projections for the WA forecasts would not be as well placed as they are now?
Yeah, certainly, mining's valued at around, accounts for around 40% of our economy. So if it's not performing as strongly, that will definitely impact.
Thank you. With respect to government finances, are you able to give us an indication of the projected surplus for the state budget?
No.
As in prior to the as part of the pre-election forecast.
Oh yes, I'll just open my. So I'm just reading from the key budget aggregate table.
Yes.
So the pre-election projection statement forecasts the net operating balance in 2021 to be 3.124 billion, and that's on page 2 of the document. Table 1 of page 2.
I noticed that there's reports in the ABC yesterday that's predicted that our budget surplus might expand up to over $5 billion. I'm assuming it's a little too early for Treasury to make a comment on that. Would that be correct?
I'm not going to be making a comment on it. That's not my area of Treasury.
Fair enough.
And it's not
That's
for me to do.
Fair enough. Thank you very much for that. And sorry, a final question. With respect to the Minister's submission for a $19.20 increase, are you aware whether Treasury or yourself or your department was asked to identify what, if any, impact that might have on the economy?
We were offered an opportunity to comment on the position. Yeah.
Okay. Yeah.
On the position that's taken.
Right. Are you in a position to be able to tell us what your comments were on that?
Look, the one comment, I suppose, we would say is increases that are continuing above. So the $19.20 is in percentage terms a bit more than we're expecting WPI to be, and if you have numerous years of where the WPI the minimum wage keeps increasing above the WPI. Some employers may prefer to switch from their skill composition of workers, but there's no hard. It was a risk we noted rather than, or an issue we noted, and only a potential issue. We didn't. It's something that could happen. That's all we noted.
Thank you very much for that, Mr. Christmas. Chief Commissioner, that's the extent of our questions. Thank you.
Thank you, Ms. Mott. Dr. Diamond, do you have any questions of Ms. Christmas?
I do. Thank you very much, Chief Commissioner. And yes, thank you, Mr. Christmas, for your, as always, interesting presentation. Look, I might just reference your Outlook document that was submitted. Page 14, the table of economic forecasts. So looking up at the top line you've got there, as has been noted in the national figures as well, you're going from 0.25 for household consumption to 3% for household consumption and then 2.5. But all along the bottom where you see prices, consumer price index and wage price index, basically for 2021 and 21-22, this looks like zero real wage growth. So with zero real wage growth, where is the household consumption growth going to be coming from?
Well, part of it is a recovery in spending as households have the opportunity. But as I noted, the savings rate's also gone up, so household balances are stronger than they have been. So there is a capacity for that pattern to be apparent, so they can spend from their accumulated savings.
And to what extent would the improved household savings balances be down to programs such as JobKeeper, the early release of super scheme, for example, or perhaps the coronavirus supplement, all of which have now ended?
Yes. Certainly they would have benefited, but at the same time, people weren't spending as much, and that's reflected in the data as well. So they've come from a variety of sources.
Okay. Well, thank you for that. And so you also mentioned, once again, referring to the Outlook documents, page 11, similar to what you've just presented. Industry consultation has revealed that some firms may be opting to pay one-off bonuses to attract and retain staff rather than grant permanent salary increases.
Mm-hmm.
So, I mean, they may be doing that, but once again, what does Treasury have any view about the impact of one-off measures such as bonuses on sort of spending rather than sustained wage increases?
Right now, the spending, each household will determine what it's going to do with a bonus or not. Obviously, conditions now with that household saving rate going up means that the bonus will be something they take into account with their broader circumstances.
And so if indeed we are relying on bonuses, what in fact is going to be the source of pay rises in the future, given, once again, you're basically forecasting zero wage growth for the next couple of years?
Well, I'd say that there's still a large accumulated savings there, and if you actually look at our savings chart, it's much larger than nationally.
And how long do you estimate the savings impact will last?
Oh, we haven't specifically said this is how much savings will go into household consumption. But it may actually reflect that their future saving, they are happy to reduce their future savings to what they might have been otherwise.
And but without a sustained wage increases or a growth in the wage price index into the future, sort of where does the saving come from?
Well, some of that saving could easily be because we know, for example, that notwithstanding that consumption in aggregate is lower, some big items, including cars, have been selling very well. So if you brought forward your spending on some of those large items, then you're not needing to use your future income stream on purchasing a new item, for example. So you could either say that you could consume from that.
So we could expect people to bring forward their spending on cars and boats, but then they wouldn't have anything. They wouldn't have any savings into the future.
Well, my point is the savings rate's gone up at the same time as people have been spending more on these items, so they don't need to spend on those items as well. It's not running down the savings rate in the future by buying big items. That's my point.
Do we have information about whether those large items, like cars in particular, are financed or whether they're paid for outright?
No, I don't have that information. No.
Right, thank you very much, Mr. Christmas.
No worries.
John? Mr. Twomey, do you have any questions of Ms. Christmas?
Yes, thank you, Chief Commissioner. Thank you, Mr. Christmas. I wanted to ask you in particular around housing costs, because one of the things that I'd noticed is I was a little surprised the only data that you had was around the big boost in spending around housing construction. But given that what we're considering here is the living standards of workers reliant on state wages and those on the minimum wage, wouldn't it be more informative and appropriate to have information around rental costs and rental availability at the moment?
Certainly rental costs, the rental market is tight, and that rents have been going up.
Yes, and I suppose what I would be interested in knowing is Treasury actually doing work at the moment with the state government around monitoring the impacts of the end of the rental moratorium and on the availability of rental, on the impacts that that's having on lower income households and impacts around housing affordability. I mean, I note when you go to your page 11 on household consumption, the biggest single item that comes up there is around rental.
Is this the presentation, Mr. Twomey?
I'm just asking
Or the
a question. Oh, sorry,
page
yes.
11 of the presentation
Page 11
document?
of the
Yes.
presentation
Yes, thank
was
you.
the household consumption. So we see that rental is by far the largest factor here. And our concern at the moment is, and I guess I'm asking you, do you have data to hand around what the change in rental affordability has been and how that might impact on the considerations for the Commission around how wages are keeping up with housing costs?
Rents have been going up. So that data is available from sort of REWA or a number of other providers. Well, I don't actually have those stats here, but they are obtainable. And we obviously monitor those, and they have been going up.
Okay, thank you for that. My only other question was I noted with the projections at the moment that we've characterised by having a period of low unemployment, high employment and hours worked, and that we're projecting kind of solid growth going into the future, but your projections around wages were remaining very flat. Is it unusual? Would it be expected where we're having relatively low unemployment and that there are particular areas where we're seeing real skill shortages that we would be expecting to see more pressure on wages? And do you think there is something unusual around the fact that we seem to have a disconnection between what's happening with the workforce and market availability there versus wages?
Yep. So I think what I've mentioned before is that, as the Chief Commissioner's noted, and as you've noted, there's some anecdotally there's certainly pressure areas of shortage that hasn't resulted in generalised wage pressure, but I suppose the extent to which you hear about those anecdotes are occurring seems to be a bit more frequent. So then the question is, when does that flow through to wages? And as I've noted this morning, if you look at the national WPI, which includes bonuses, that increased by 0.8% in the March quarter, whereas the national one that doesn't include bonuses increased by 0.5 from memory.
So following on that, we've recently had the comments from the Federal Treasurer saying, the federal government is now pulling back on its stimulus expenditure. It's done the job of helping us through the first wave, and that what we needed now was sustained wages growth to build the growth and resilience of the economy. So I guess my question there is, if we're seeing that disconnect there and we're expecting wages to stay flat, what's the impact there around our future projections?
Yeah. So our unemployment rate is expected, well, the PFPS projections have been for the unemployment rate to stay at above 5%, 5.5% in the 2 out years. The Commonwealth's expecting a lower rate of unemployment, so lower level of excess capacity, I suppose, which is why their wage growth can differ from ours.
Yeah.
Okay. That doesn't, as additional data comes out, and as part of our current process of forming the next budget, we'll obviously be reviewing forecasts in light of what transpires.
Okay, thank you very much. No further questions.
Thanks, Mr. Strowman. Mr. Entry, did anything arise out of any of those questions that you may wish to put to Ms. Christmas?
Not specifically, Chief Commissioner. We just note that Mr. Christmas is obviously here as an economic witness, and so a lot of the data that he's presented, which is very thorough, is focusing on the macroeconomic indices, so it won't necessarily pick up on all of the social criteria that that also affects the state wage case. So,
All right, thank you.
thank you.
Mr. Christmas, thank you very much once again for your assistance and the effort you put in and the time. It is very helpful to us and to those at the bar table. So thank you very, very much.
Thank you, Commissioner. Chief Commissioner, sorry. Thank you.
We might mark the presentation that Mr. Christmas has prepared for us. That will be Minister 2. Now, Mr. Entrican, when you're ready to continue, please.
Thank you, Chief Commissioner, and thank you to Mr. Christmas. We know Treasury's undertaken a significant amount of work to assist with today's proceedings, and it's been a particularly challenging year with a lot of new data coming in on an almost daily basis. So the Minister extends his sincere appreciation for your time today. I'll now move on to the Minister's substantial position. The Minister relies primarily on the written submissions already lodged with the Commission, but I'll take the opportunity to reiterate the basis of the Minister's position and to address some of the issues that have been raised by the other parties The Minister recognises the importance of maintaining a strong and meaningful safety net for employees covered by the State Industrial Relations System. The annual state wage case proceedings are a vital component of the labour relations framework. It's a key part of the safety net protecting West Australian workers. The Minister notes this is the second state wage case that's taken place since the onset of COVID-19, and it's an event that's been unprecedented in its scale and size, and created many challenges for employers and employees alike. As COVID necessitated the introduction of various health and social distancing measures to control the spread of the virus, it was necessary for last year's state wage case proceedings to be conducted entirely on the papers, and we're pleased to be able to reconvene in person this year.
Yes, so are we, Mr Entry.
The Minister notes the Commission awarded a 1.75% increase in minimum and award wages in last year's state wage order, which was in line with the national decision of the Fair Work Commission in the annual wage review. As many industries were significantly affected by the global COVID-19 pandemic at the time of last year's state wage case, the operative date of the increase was deferred until the first pay period on or after 1 January this year. The Commission's decision in 2020 was well considered and assisted many low-paid and award-reliant workers by maintaining the real value of their wages, whilst also protecting the interests of those employers that were most affected by the impacts of COVID. While COVID-19 has posed many challenges, the Minister notes Western Australia has navigated the pandemic effectively over the last 12 months. As Mr Christmas noted in his presentation, the state's ability to avoid widespread transmission of the virus has enabled the economy and labour market to recover faster than initially predicted, and that's brought benefits to businesses and workers alike. As demonstrated in much of the data presented by Mr Christmas, there has been a strong rebound in many of the key indices in recent months, and that's been underpinned by a solid household spending recovery and a tightening labour market as well. The Minister acknowledges some sectors continue to be adversely affected by measures introduced to contain the spread of COVID-19, and it is appropriate that the Commission's deliberations are made having regard to the varying conditions experienced by employers throughout the economy. In the prevailing climate, the Minister submits it is appropriate the state minimum wage and state award rates of pay be increased by $19.20 per week in this year's state wage case, with a proportional increase to junior employees, apprentices and trainees. The Minister contends such an increase should take effect from the first pay period on or after 1 July, in line with normal conventions. A $19.20 per week adjustment would increase the state minimum wage by approximately 2.5%, lifting it to $779.20 per week. And the Minister contends this represents a fair and sustainable quantum that would provide a welcome increase to minimum and award wage earners, whilst not jeopardising the state's ongoing recovery from the impacts of the COVID pandemic. As a flat dollar increase, it would also equate to less than 2.5% for award rates of pay above the minimum. And we have a few examples. For example, it would work out to a 2.2% increase in the C10 tradesperson's rate in the Metal Trades Award, or it would be a 2% increase for a senior hairdresser under the Hairdressers Award, or a 1.7% increase for a pharmacist working under the Pharmacy Award. By granting a measured wage increase, the Commission can help to ensure income inequality is not exacerbated in Western Australia and that low-paid workers are adequately protected. The Minister notes the most recent seasonally adjusted estimate of average weekly ordinary time earnings in Western Australia is about $1,840 per week, or approximately $96,000 per annum. At the same time, the state minimum wage is currently a little bit under $40,000 per annum, and the C10 classification, the skilled tradesperson's classification, is a little over $45,000. As also outlined in the Minister's primary submission, the most recent data indicates that award-reliant employees in Western Australia have much lower average earnings than those employed on collective agreements or individual arrangements. So minimum and award wage earners are certainly not highly paid by any measure, and it's appropriate their wages be adjusted by a fair and sustainable amount in this year's state wage case. The Minister contends that doing so will help to satisfy many of the objectives prescribed in Section 50A of the Industrial Relations Act in a balanced and considered manner. Just on apprentices and traineeships, the Minister's written submission includes detail on apprenticeship and traineeship commencements as well as numbers in training. The information and analysis regarding training arrangements in Western Australia has been provided by the Department of Training and Workforce Development, and the Minister thanks that department for providing the information. As outlined in the Minister's submission, apprenticeship and traineeship commencements increased noticeably in 2020, which is a very encouraging sign.
Certainly is.
And traineeship commencements actually increased for the first time in 8 years, which is very good. And apprenticeship commencements actually increased for the 4th year in a row.
We know there have been incentives, of course, offered to employers in recent years to promote the take-up of apprenticeships and traineeships, but it would appear correspondingly that state minimum wage increases over that period have not seemed to have been too much of a disincentive.
Correct. Yes, we've seen increases in training numbers, notwithstanding regular adjustments in the state minimum wages. And certainly there is a lot of government support available, and I think that there was an attachment to the CCI's submission.
There is indeed.
And I think it was also alluded to or referred to in the Union's WA submission as well. So there is quite a bit available from the state and federal governments in that sphere. The total number of West Australians presently engaged in training also increased in 2020. And the Minister's pleased to note there has been increases in a range of skilled trades, including automotive trades, electrical trades, building and construction and metals and manufacturing. The increased uptake of training opportunities complements a variety of financial incentives and support payments available to employers and employers and employees to upskill the state's workforce as we enter the recovery phase of COVID-19. With skill shortages starting to emerge in a number of sectors, it is important that training wages continue to be adjusted to attract employees to vocational education and training opportunities in Western Australia. And the Minister's also provided an updated schedule of registered training packages and industry skill levels.
Thank you for that. That's very helpful, Mr. Chair.
Thank you, Chief Commissioner. I'll just raise one particular issue just on a rate of pay for 2-year apprenticeships.
Yes.
One particular issue the Minister wished to raise this year was the rate of pay for award-free apprentices undertaking a 2-year apprenticeship. As outlined in the Minister's primary submission, there's presently a gap in the state wage order whereby award-free apprentices undertaking a 2-year apprenticeship don't have a relevant minimum wage. There's currently 2 apprenticeships in WA that can be undertaken on a 2-year basis. They're both in the building trades. One is in joinery and one is in concreting, which is now a trade. All other apprenticeships are between 3 and 4 years duration, and I've confirmed that with the Department of Training and Workforce Development. In 2006, the Building Trades Construction Award was amended to include a minimum rate of pay for apprentices undertaking a 2-year apprenticeship. However, because apprentices in concreting actually fall outside the scope of the award, they fall outside the scope of the award because there's actually no recognised trade of concreting in the award, and apprenticeships under the award are linked to recognised trades. And because of that deficiency, there's a cohort of apprentices that find themselves award-free. Pursuant to Section 50B(3) of the Industrial Relations Act, the Commission's required to ensure that at any particular time there's an applicable minimum weekly rate of pay in place for each class of apprentice. So the Minister therefore recommends that the Commission establish a minimum rate of pay for award-free apprentices undertaking a 2-year apprenticeship as part of this year's state wage case proceedings. For a number of years, the Commission has linked the minimum weekly rate of pay for award-free apprentices undertaking apprenticeships of 3 to 4 years duration to the rates contained in the Metal Trades
General, yes,
General
correct.
Award. The Minister would also recommend this award be used to establish rates of pay for a 2-year apprenticeship with the applicable minimum wages equal to the 2nd and 3rd year rates of a 4-year apprenticeship. And we thank the other parties for indicating some support for that.
Yes, that appears to be not
initiative.
too controversial, I'm pleased to observe. Thank you.
Perfect. Thanks. I'll now briefly address some of the issues raised by the other parties in this, and then I'll just touch briefly on the commissioned research undertaken by Professor Borland. Start with the Chamber of Commerce and Industry. In its submission, the CCI advocates the state minimum wage and state award wages be maintained at their current level. The CCI contends essentially that the current environment there is a need to prioritise jobs and viability of small businesses ahead of wage increases. The Minister acknowledges that many industries were adversely affected by the onset of COVID-19 and that some challenges continue to be present. And the Minister is certainly not insensitive to the plight of small business employers and is cognisant of the need for any increase to be affordable. However, if the Commission were to award no increase in pay in this year's state wage case, many employees would face a real wage reduction. A wages freeze, the Minister contends, would be inconsistent with the promising recovery in economic conditions in Western Australia, particularly in recent months, and it would also put further downward pressure on wages growth. It would also see the wages of minimum and award wage earners fall further behind the rest of the workforce, which could contribute to an increase in wage inequality. The Minister notes that a wages freeze could also see the state minimum wage for full-time and part-time employees fall behind the level of the national minimum wage. While the state minimum wage for casual employees is currently lower than in the national system because of the lower casual loading, providing for no increase in this year's state wage case could see the state minimum wage for all adults, full-time, part-time and casual, fall below the equivalent national rates. The Minister contends this wouldn't be a desirable outcome for state system employees. By granting fair and sustainable wage increases over a number of years, the Commission's played a critical role in helping to improve the living standards of employees, and in particular to meet the needs of the low-paid. Many workers earning minimum and award wages are solely reliant on the outcome of the state wage case to make ends meet, and regular and meaningful adjustments to pay are important to ensure their needs are adequately safeguarded. The Minister submits that a solid economic recovery and a strengthening labour market warrants an increase in minimum wages in this year's state wage, and that an increase in the order of around $19.20 would be a fair and sustainable outcome in the current environment. I'll just briefly touch on Unions WA. The Minister notes that Unions WA recommends the Commission increase minimum and award wages by 4% or $30.40, whichever is the greater in this year's proceedings. According to my maths, as 4% appears to be equal to or greater than $30.40 in all cases. Unions WA is effectively advocating for an increase of 4% to all minimum wage rates. The Minister shares the concern of Unions WA that living standards for the low paid are protected and supports a fair increase that will benefit low paid workers, while also continuing Western Australia's solid economic recovery. And while the Minister supports an increase in minimum and award wages, it is important that any adjustment remains sustainable for employers operating in the state system. The Minister submits that some small business employers in the state industrialisation system may find it challenging to meet a 4% across the board wage increase in the present climate. As a percentage increase, it would also translate into a higher quantum for wage rates above the award minimum. For instance, at the C10 tradesperson's rate, a 4% increase would equate to $34.63 per week, or for a retail pharmacist, an increase of about $43.96. Obviously, those rates would be rounded according to long-standing conventions. The Minister encourages the Commission to award a balanced and sustainable outcome in this year's state wage case and contends that an increase in the order of $19.20, flat dollar in that range would appropriately achieve that aim. The Minister concurs with the observations of Unions WA in its primary submission that employed women are more likely to be minimum wage earners, and including those in more skilled classifications, particularly in the social and community services sector. Female employees are more impacted by increases in minimum and award wages, and as Unions WA notes, they are particularly prevalent in the private sector industries most affected by the state wage order. The Minister submits the fact that many low-paid women are concentrated in the industries covered by the state industrialisation system, supports the case for a fair and sustainable increase in minimum and award wages being granted in this year's state wage case. The Minister acknowledges the state wage case alone can't address all issues concerning gender pay equity in the state system. However, regular wage adjustments can assist with enhancing economic security for many low-paid and award-reliant women. Just on wage costs, as with Unions WA, WACOS proposes a 4% increase in the minimum wage, albeit it hasn't specifically proposed a particular increase for other award wages above that level. As the quantum proposed by WACOS is similar to that of Unions WA, the Minister's earlier comments regarding the quantum would be relevant in the case of WACOS. The Minister acknowledges the detailed information provided by WACOS regarding living costs and inequality and poverty amongst marginalised and vulnerable members of the community, and certainly thanks WACOS for providing that valuable information. The WACOS submission provides very useful background information for the Commission's consideration on a range of those social equity criteria set out in Section 50A. As WACOS highlights in its submissions, a number of vulnerable employee groups are subject to the state industrialisation system, including female employees, young workers, Aboriginal and Torres Strait Islanders, and migrant workers. Many of these employees are concentrated in low-paid work covered by the state system, and the Minister submits this as a relevant consideration that supports an increase in minimum and award wages. I'll just touch briefly on the two research reports prepared by Jeff Borland for the Fair Work
Yes, thank you very
Commission.
much, Mr. Ashram.
Thank you. And the Minister thanks the Commission for the opportunity to comment on those two research reports. Both were prepared by Professor Jeff Borland from the University of Melbourne as part of the Fair Work Commission's research program. In general terms, the Minister notes that much of the national data contained within those reports largely reflects the experience in Western Australia, coinciding with the V-shaped recovery. However, state-level data, as demonstrated in the Minister's submission and the information provided by the Department of Treasury, does provide a more direct insight into conditions in Western Australia than data for the national level. Just on Research Report 3 of 2001, that was the lengthier report.
Yes, they are to be read together essentially.
Yes,
4 follows
yes.
3 as a supplement.
Certainly.
Essentially.
And the Minister notes that the very early impacts of the initial job losses and subsequent recovery in employment followed a similar pattern in WA than it did nationally, including an initially larger negative effect on female employees and then a subsequently stronger recovery in female jobs after that. Part-time employment in Western Australia also reduced more than full-time employment in the early stages of COVID, as it did nationally. And then part-time employment similarly staged a recovery and increased at a faster rate than full-time employment subsequently. As Professor Borland observes, the impacts of COVID-19 recede, a number of pre-existing trends in labour market data are starting to reappear, and certainly that's starting to ring true for Western Australia as well. The Minister notes there's been a strong rise in the job vacancy rate, both in Western Australia and nationally. Indeed, the vacancy rate in Western Australia has actually spiked to record highs in recent months. Professor Borland goes on to speculate about what might be causing such a large spike in the vacancy rate, and postulates that the most likely explanation is that that's the result of the rapid speed of the labour market recovery. And as Professor Borland observes, the hiring process takes time, and in the initial phase of a recovery, increases in vacancies can run ahead of the capacity to fill them. So sometimes you'll see a relatively large increase in the vacancy rate and a smaller relative decrease in the rate of unemployment for a period of time until that employment is absorbed, that unemployment is absorbed. The Minister notes the national experience of household consumption decreasing and then increasing in 2020 was similar in all states and territories. After an initial flurry of consumption late in the March quarter 2020, when consumers stripped the shelves bare of toilet paper and pasta, consumption plummeted in the June quarter before staging a solid recovery in the second half of 2020. Employment and hours worked also followed a similar trend at the state and national level, with large decreases in jobs and hours recorded in the period between March and May 2020, followed by a solid recovery in both from June 2020 onwards, as various lockdowns and social distancing restrictions were gradually eased. The Minister notes that a fair bit of data from the weekly payroll and jobs survey is used in Professor Borland's research. And certainly, while not disputing this will come to be a very valuable data set in future years, the caveats set out in the Minister's written submission are worth noting that not all small businesses have yet to migrate to that single touch payroll system. Something like 77% of small businesses have. So there's a
caveat. over
That's
those
right,
numbers,
yes. So it's not picking up all jobs and wages data. It's at the state level, there's also a fairly high level of revision between releases. So it comes out fortnightly, but there's been some fairly significant revisions between the fortnightly releases. So it's longer term trends are perhaps more useful than focusing too much on the particular fortnight. As noted in the Minister's submission, there's been a high degree of, fortnightly revisions, and also the data is not seasonally adjusted either. The Minister notes the relatively low level of wages growth at the national level is also reflective of the situation in Western Australia, and that was also demonstrated by Mr Christmas. And this trend has continued with the release of the wage price index for the March quarter 2021, although as Mr Christmas outlined, the figures for wages growth, including bonuses is
compared,
quite a bit higher than without bonuses. As mentioned in the Minister's written submission, measures of average weekly ordinary time earnings in both Western Australia and nationally have been heavily skewed by COVID-19 and don't necessarily present an accurate picture of underlying wages growth. In particular, there was a number of the people who lost their jobs initially in 2020 were in lower paid casual positions, so that has the effect of pushing up AWOT, and also the periods that it's measured in also do that. So the industry fundamentals have skewed that to some extent. In relation to the data on industry clusters, the Minister notes this is the industry clusters prepared by Professor Borland for the Fair Work Commission for the annual wage review. And just in relation to those clusters, the Minister notes the Commission, the State Commission has not sought to group state awards into similar clusters for a range of logistical reasons, and hasn't staggered the increases for minimum award wages, also for good reason. So as such, much of the information prepared by Professor Borland around industry clusters probably isn't as relevant for the state wage order. In regard to employment by industry, the Minister notes that by and large, industry employment patterns following the onset of COVID-19 were reasonably similar across states and territories, as those industries that were most impacted by measures introduced to control the spread of COVID suffered the greatest loss of jobs between March and May 2020, which isn't surprising. Customer-facing positions were particularly hard hit. And as would be expected, casual employees experienced the largest decrease in employment during that period, as casual employees are easier to let go. And casual employment subsequently staged a stronger increase in jobs growth in the recovery phase. The Minister notes the data concerning profits utilising gross operating surplus in Professor Borland's paper mostly concern corporations, and those profit figures would be of limited utility for the state wage case. Just on Research Report 4, the Minister notes that Professor Borland's attempted to make some very preliminary assessments concerning the impact of the end of JobKeeper and how that has impacted on employment. Professor Borland notes that this process is very difficult to measure based on the payroll, jobs and wages data, particularly given the period of measurement overlapped with the April school holidays, and school holiday periods can also significantly influence the data. And he actually noted there is a likelihood that the figures for April might be subsequently revised upward. As such, the Minister would urge a degree of caution when it comes to extrapolating any firm conclusions about the impact of the cessation of JobKeeper based on that data, the payroll, jobs and wages data.
Perhaps as discussed with Mr Christmas, it might take another quarter or two to get a better handle on the real impact of that.
Certainly,
cessation.
yes. We probably won't get a full picture for a few more months yet. The Minister does note the ABS labour force figures, which came out in April. Labour force figures for April, which were released this morning. And they do actually reveal Western Australia continues to have the lowest unemployment rate of the states, with the seasonally adjusted unemployment rate sitting at 4.9%. And despite the end of JobKeeper, there was actually only a relatively marginal decline in total employment. It fell 1%, but many people were expecting something greater than that in April. Encouragingly, the underemployment rate also fell a further 0.3 percentage points in Western Australia, and it now sits at a low of 7. And the underemployment rate is also now in Western Australia is now the lowest of the states as well. Nationally, the Minister notes that unemployment declined further to 5.5%, and the underemployment rate also fell to 7.8%. And across the nation, total employment only declined by 0.2% in April, which is the first month that captures the end of JobKeeper. The Minister is pleased to note that West Australian and Australian labour markets have shown a high degree of resilience in the present environment. In conclusion, the annual state wage order plays a vital role in maintaining a strong and sustainable safety net for employees in the state industrial relations jurisdiction by protecting the needs of the low paid and maintaining a fair system of wages for West Australian workers. The Minister supports the Commission taking a balanced and considered approach to minimum and award wage setting. This includes consideration of all the social, economic and industrial objectives prescribed in Section 50A of the Industrial Relations Act, including the requirement to consider the need to contribute to improved living standards for those West Australians reliant on the state wage order. The Minister believes that by granting a real wage increase in 2021 to the low paid, in the order of $19.20 a week, represents a sustainable increase that would provide a meaningful benefit to minimum and award wage earners without jeopardising the ongoing recovery from the impact of COVID. The Minister has no proposed changes to the Statement of Principles and no further substantive information for these proceedings, though the Minister reserves the right to respond to matters raised in the presentation of the other parties. If it pleases the Commission, that concludes the Minister's submission.
Thank you very much for that. Thank you. Now, Mr Moss, when you're ready, please.
Thank you very much, Chief Commissioner. And if I can also start by congratulating yourself on the appointment to Chief Commissioner role.
Very kind of you, thank you.
As far as I overview our position, we do rely on our submission and submission reply in this matter. By way of a bit of introduction, it's quite clear last year's state wage case occurred at the beginning of the global pandemic and in an environment where there was a significant level of uncertainty about the impact of COVID-19 have on the economy and also for how long. 12 months on, there is still ongoing uncertainty around the impact of COVID-19. And we still do remain in an environment where the pandemic is clearly ongoing. And this is particularly so for those industries which are most likely to be impacted by the state wage case decision, particularly those small businesses in the retail and hospitality sector which continue to bear the brunt of the government restrictions aimed at controlling the pandemic. The initial restrictions introduced at the beginning of the pandemic had a substantial impact on businesses as well as employees. But largely, or significantly, this was tempered by the unprecedented level of government support provided largely through both the JobKeeper and JobSeeker schemes. And we would note that the WACOS cost of living report does show some of the impact of JobKeeper schemes, and also to a certain extent how it increased incomes for, in particular, part-time and casual workers, long-term casual workers, given the way that scheme was structured. During the course of 2020, the economy has started to recover as restrictions have been wound back and the government stimulus has started to take effect. In WA, the strong performance of the resource sector has dominated this recovery, with the mining sector now accounting for 43% of the WA economy. This is a record high. Over the last 10 years, the average contribution of the mining sector to the WA economy has been around 32%. It fluctuates from year to year, but 32% is the 10-year average. We are now accounting for 43%. And what that really demonstrates is that when we are looking at the performance of the WA economy, we're looking at an economy driven by mining sector and government stimulus. And that is significantly influencing our headline results. So whilst the mining sector has continued to go on strongly, those businesses which are most affected by the state wage decision, particularly, once again, small businesses, retail and hospitality, continue to face significant uncertainty and risk. In 2021, and at a time that we were hoping to see the worst of the pandemic past us, WA businesses have faced the challenge of snap lockdowns and ongoing restrictions in response to the COVID-19 pandemic, at a time when government assistance aimed at lessening the effect of those restrictions are winding down or have largely ceased. This has had particularly significant impact on businesses in the retail, hospitality, tourism and personal services sector. In our submission, we've referred to surveys that we did immediately after the April lockdown, and we've included some commentary from our members, and I'll just perhaps draw the Commission's attention to those comments, because it starts to demonstrate or put a clear picture on the effects that this is having on their business, and particularly the uncertainty that's coming across for those employers, and the concerns that they have with respect to the ability to continue on with or continue maintaining employment for their staff, particularly ours. There is a clear potential for further lockdowns and restrictions, and this is further compounded by the delay in the vaccine rollout. It's clear that business conditions are going to remain challenging and unpredictable, particularly for those industries that are most affected by the restrictions, and that is, once again, retail, hospitality, personal services. We'd also note it's these small businesses that create employment opportunities, particularly for young Western Australians and for those with lower skills and less work experience. As has previously been identified, faced with higher employment costs, small business owners will frequently increase their own working hours at the expense of additional employment opportunities for their award-reliant employees. We frequently hear examples of small businesses where they are increasing the amount of time that they are spending working in their business to help offset the costs of employment. And the problem with that is, in increasing the amount of time they're working in their business, they're spending less time working on their business. And that hampers their ability to look for opportunities for grow their business and then extend their opportunity for employment. Touching briefly on the positions of the relevant parties, With respect to the Minister's position for a $19.20 per week increase, we do note that this is in line with the public sector wage policy, which limits negotiated wage outcomes to a maximum of $1,000 per annum. That equates to $19.23 per week. So it's marginally different. We would say that there's clearly a significant difference in the capacity for the government to increase wages for its own employees when compared to that of small unincorporated businesses who are affected by the state wage case submission. As Mr Christmas noted, the state government is currently projected to operate under a $3.12 billion surplus. That is significantly better than any other small business would be in. Now, in no way in saying that are we advocating or suggesting that the government should change its wage policy. It's appropriate that government is fiscally minded with respect to increases that are provided to employees. But we'd also note that it's equally the case that all businesses need to be mindful about what capacity and what ability they have to be able to afford increases. We'd also note that the government's wage position is with respect to negotiated outcomes through enterprise bargaining, which, at least in theory, provides the government with the ability to offset or use the increases to negotiate changes to their employment conditions that better suit the agency's operating environment. Clearly, that's not the case with respect to increases to awards. The claim equates to a 2.53% increase to the state minimum wage. We note that this is 2.5 times greater than the change in the Perth CPI in the 12 months to March 2021, and significantly higher than the wage price index for WA at 1.4% for March. Given that, we don't believe it's a sustainable increase. With respect to Unions WA and WACOS, we notice that Union WA is seeking a wage increase to state minimum wage and award rates of 4% or $30.40 per week, whichever is greater. As Mr Endrican has identified, the 4% increase to a state minimum wage equates to $30.40, and hence it's unclear why Unions WA has framed the claim in the manner in which it has, and we'd probably suggest that Unions WA might want to express that a little bit further. We do note with concern that in previous years, Unions WA has sought to seek a full increase to juniors and apprentices. If that is what they're seeking, they haven't established that clearly and haven't made out the argument for that. Neither Unions WA or WACOS have provided any justification for how they've reached the position, which reflects an increase 4 times greater than that of current CPI. And one of the things, and whilst the Unions WA and WACOS have expressed concern about the level of wage growth generally, and their concerns about that, one of the things that we will reinforce is, as the RBA has noticed, as Mr Christmas has alluded to as well, it's increasing employment that will get us to a position of being able to generate much, much higher wage growth than what we've currently got. And so from our perspective, the real concern with the claims raised by Unions WA and WACOS is the claims don't get it in the right order. We need to work on employment first in order to generate increased wage growth. In our opinion, the claims can best describe as ambit and made without consideration of the criteria under 50A of the IR Act. Now, on that particular point, we do note that both the Ministers and Union WA claims that CCI WA's position is also inconsistent with 50A3. This is not unsurprising. And we share a similar view with respect to the respective positions there as well. What I'd like to do is turn to the criteria under 50A3. And we do note that this provision of the Act establishes criteria that the Commission shall take into consideration. It does not follow, therefore, it commits the Commission to a particular outcome. And we do not agree with the perception that the criteria requires that the Commission must grant an increase, nor does it oblige that such an increase must be greater than the cost of living. We also note that it is important to note that the Commission has discretion to consider any other matter that it considers relevant. Ultimately, the Commission has the unenviable task of considering the often competing objectives established under the Act and having to take into account the views of parties who rarely agree with each other.
It's ultimately a balancing exercise, is it not, in terms of the criteria, with none over the other being weighted more favourably or less favourably. And the Commission, of course, also needs to ensure that it applies the statutory obligation in accordance with section 26(1) of the Act, which is in accordance with equity, good conscience and substantial merits of the case, which is an overriding provision of the statute as to how the Commission exercises any of its jurisdiction. So there's, as you say, there's a juggling act that needs to be engaged in relation to parties' positions which, as you say, rarely align, and that's our job.
Yes. Thank you, Chief Commissioner. I certainly agree with you, and once again, unenviable task in that respect too. Looking at the state of the economy, we would say that the state of the WA economy as a whole is made up of the contribution of each of its components. In the case of the WA economy, it's clear that our ability to rebound from the initial impact of the COVID-19 pandemic has been a result of the performance of the mining sector and also the significant level of government stimulus that's been injected into the economy. And perhaps borrowing from Professor Preston's submission, a lot of that government stimulus is focused on shovel-ready projects. Now, clearly there's still a way to go for WA to get back to where it was. And the ongoing commitment by the federal government to increase spending to help stimulate the economy is aimed at continuing that forward momentum. But clearly we are not there yet, and not all sectors will benefit in the same way or as directly from these stimulus measures. We take note from the Federal Treasurer in the budget submission, his opening statement, Australia is coming back. I would clarify it is coming back. That's not the same as we are back in business or back to where we were. Okay. We do note that we are still lagging behind where we were expected to be prior to the pandemic.
I mean, I think it's fair to say that trend growth presently particularly is below trend, so the last decade or so, and that's not disputed on the figures, but it's a question of the strength of the recovery and the underlying metrics such as labour market participation, growth in employment, and those sorts of things. On the question of mining and stimulus being drivers, is there an argument that, to quote the saying, a rising tide lifts all boats, that when you have strength in certain sectors, for example in mining and resources, you have suppliers to mining and resources companies through the flow-on effect in the supply chain, tends to promote greater consumption, greater spending and health in the economy more broadly?
Yeah, so no, and we would agree with that sentiment that there is clearly a flow-on effect. So where you have sectors within the economy that are performing well, then that helps contribute more broadly to general economic success. So there is, as you said, the rising of the tide. The problem is the tide doesn't necessarily rise evenly. So the flow-on effects can take time to trickle through to other parts of the economy, and I'll touch on that a little bit with respect to vacancy rates as well, because I think that is quite a relevant element. The other thing is whether there's other matters that counteract that broader trickle-through effect. And, you know, for example, you've got greater economic growth, you've got greater ability to spend, but you also need to have the opportunity to do so as well. And so things like snap-back lockdowns and ongoing restrictions limit that capacity, and also then to a certain extent erode some of that confidence too. So you made the example of, you know, are we getting to a situation similar to what we had with the resources-led construction boom earlier on? and to a certain extent that there may be some things to have some parallels that, you know, particularly with skilled labour, we're starting to get some shortages, and that starts to have a flow-on effect. But we are also in a different environment as well, where there's a lot more uncertainty.
Oh, yes,
Yeah.
most definitely.
And I think I'd make the important aspect, the fact that we're seeing growth and the fact we're seeing positive growth is really good outcome. And we're not suggesting that we are in a much better position than what would otherwise be forecast. The problem is we're still on that path of recovery, and some industries are lower down on that path than others. And we need to be, I think, very mindful in this environment not to start overreaching, particularly for those industries which are still most significantly affected. And that's probably one of our biggest cautionary notes in considering increases to the minimum wage, is that we don't look at the fact that the mining industry is dominating where the economy is going to and start pinning things based on how the resource sector is going, because that's not how the accommodation and retail sector is going. And representing 43% of the economy, the mining industry has a significant skewing effect with respect to the headline figures.
Do you agree that confidence and household consumption are elevated?
So if we're looking at confidence, so one of the things that we looked at with the CCI Business Confidence Survey, which was actually taken before we started having some of the lockdowns that we've had most recently, is we started seeing elevated levels of business confidence as well as consumer confidence. Now, we need to take that into consideration. That's coming off a very low ebb too. That during 2020, business confidence and consumer confidence were quite low. It's not unsurprising that coming into 2021, those confidence levels are much higher. So, but some of the issues that we're looking at around that confidence is some of the assumptions that are applying there. So part of one of the key assumptions for increased business confidence was the rollout of the COVID-19 vaccine and the impact that would have on maintaining state borders being open and bringing forward the opportunity for international borders to be reopened. The much slower rollout of the vaccine, combined with the lockdowns and the increased concern of community transmission, whilst we haven't redone our business confidence survey since that, our concern is that will have a dampening effect on confidence.
All right, thank you.
As the Minister's recognised, many WA businesses have faced challenging conditions over the past year as a result of the measures to address COVID-19, and a number of these sectors continue to do so. And our concern is the businesses most affected by the recent lockdown are those which are overrepresented in the state system. So once again, we're coming back to the accommodation, hospitality, retail sectors. As outlined in our submission, businesses in the accommodation, food service industry and retail trade was the sectors which had some of the highest uptake of JobKeeper subsidy. These industries have also been the most affected by the recent lockdown and subsequent restrictions. Accommodation and food services industry contributed contribution to GSP by contracting by 0.1 percentage points and flat growth within retail trade. So they've not been contributing to the economic growth. And the number of employees working in the retail trade sector has fallen by, and this is to the February data, 16,000 workers. And more concerning, the proportion of part-time jobs increased to 56%. And in the accommodation and food service industry, we've also seen a shift in the number of part-time workers from 58% to 62%. And this shows we're seeing this increasing trend With the labour force data has been showing quite a high level of volatility, but in particular, the growth that we've had since February of last year has been in part-time work with a contraction in full-time hours. I'd perhaps ask the Commission Court Session indulgence that perhaps in making submissions, further submissions on the national account data later on, they were also afforded an opportunity to provide submissions on the recent labour force data. But preliminarily, we noticed that there's been an upswing of 12,300 part-time jobs since February of last year, and a decline of by 4,000 full-time positions. Minister Entrance identified that our unemployment rate is at 4.9%, but we'd also note that there's also been a decline in the participation rate as well. And our understanding is that there's also a very significant drop in the number of hours worked during April, and that it would appear that a significant contribution of that is the April lockdowns.
Or potentially school holidays or a range.
Well, it may be, and this is why it'd be useful for us to provide some submissions after we've been able to look at that data properly, because as you appreciate, it's only come out this morning and hasn't given us much opportunity to look at that. So, and when we are looking at the labour force data, whilst there's been some notable improvements, there's also a high level of volatility attached to it as well. And one of the clear comments from the RBA has been that there is still quite a significant amount of slack in the labour market, and that's one of the things, of course, which is holding wage growth back. So our concern is that it's not appropriate to conclude that because the mining sector, and by default then the WA economy, is performing well, that all sectors are performing well and can afford a substantial increase in the state minimum wage and award rates of pay. We are concerned that the Minister's submission does suggest that this should be the case. Okay, and that's something for us which is concerning.
I had understood the Minister's submission to be framing it as a fair and sustainable, but not substantial. I think that language was Unions WA, but not the Minister.
We'd say that in the case of where inflation is at the moment and where wage price index is at the moment, then what equates to a 2.53% increase to the state minimum wage is substantial.
I see. Thank you.
I would, of course, identify that WACOS in Unions WA is far more substantial.
It's all relative, Mr. Moss, isn't it?
Well, it is. So in considering the state of the WA economy, we'd encourage the Commission to consider that the economy remains below pre-COVID-19 projections. So we've not, whilst we may be considered, particularly in some of the headline measures, to be back around where we were before the pandemic, we haven't moved forward to where we should have been. But more importantly, the outcome is mixed. And I'll reinforce again that some of the more award-reliant industries, retail, hospitality in particular, continue to be the most affected. Government support has been wound back, which means that those in sectors which are most affected by the restrictions will also be the sectors which are bearing the cost of the efforts to control the pandemic as well. And as mentioned before, there is significant volatility in the labour market, particularly with part-time roles replacing full-time roles.
In terms of cost, I think you've referred to in your submissions that from the material provided by your membership that in the case of the effect of the lockdowns in February and April, a lot of the cost loss is not recoverable. In other words, it can't be made up quickly. That's the tenor of your submission.
That is. So we've put some particular comments, and I will touch on this a little bit later, but For a lot of the industry sectors, we did ask the question, particularly from following on from the issues that were raised in last year's state wage case decision about whether or not there was an opportunity, you had the pent-up demand. So we did ask that question about what extent they were to be recoverable. And it did vary significantly between industries, but particularly in retail and hospitality, that recovery of lost revenue is low. And what that doesn't also take into consideration as well is the costs that were incurred, those fixed costs that were incurred at any rate. So one of the things that came through particularly strongly with the food and hospitality sector is they had purchased particularly perishable foods items. There was no opportunity to sell it, so you've got significant cost wastage by way of perishables. You can't keep those. And not necessarily a matter for this commission, but part of that was the timing and the amount of notice that were given of the snap lockdowns. So in the case of the lockdowns prior to the Anzac Day long weekend, the announcement had been made after deliveries had been made. So hospitality, retail businesses, also hospitality in particular, had already ordered their products in, they had arrived, then they were notified of lockdown. So there was no opportunity to mitigate those costs. And it wasn't just Perth and Peel as well. For those businesses in the southwest, whilst there might be a view that a number of people from Perth managed to escape Perth prior to the lockdown taking effect, the way the lockdown was subsequently stymied is their ability to then move freely in the southwest was restricted, and so therefore those businesses in the southwest were also negatively affected too. I do also just want to comment on the issue about vacancy rates. The feedback that we are very much getting from our members, and one of the risks that has been identified from our members is filling skilled vacancies. And in our experience, that's where the vacancy rates are becoming problematic, is the lack of skilled workers. That's not necessarily reflected in the lower skilled elements. So one of the downsides of the border restrictions, both international and domestic, is it's limiting the interchange of workers, and in particular skilled workers, to fill those roles. Now, there is an argument that as those skill shortages continue and escalate, then of course there'll be a flow-on effect to lower skilled work, but that will take time. It's not something that's going to happen straight away. The other concern with a high level of skill shortage is it then inhibits business growth. Okay, to a certain extent, you can only substitute so much of skilled workers, and when you get to a particular point, then you're putting a contraction or restriction on the ability for those businesses to grow because they simply don't have the labour or the skilled labour to perform the work to the adequate levels. So there are concerns about skill shortages artificially occurring as a result of border restrictions. So at this stage, the increase in the vacancy rates, from an employment perspective, there's the benefits out there, but our experience is it's at the higher level, the skilled level, and not at this stage necessarily in the lower level, in the lower skilled roles. Mr. Christmas also identified, with respect to wage growth, the increased use of one-off bonuses coming through. Our experience with one-off bonuses is it does indicate a lack of confidence in businesses in committing to ongoing wage increases. So the benefit of using one-off bonuses as distinct from increasing wages generally, it's a one-off payment. I can do it because I might be able to afford it now, or it might be I'm able to retain particularly skilled workers now, And bearing in mind the use of one-off bonuses tends to be, or the use of bonus structures tends to be at your more skilled levels, less so at the lower skilled. But you tend to do that when you don't have the confidence to provide ongoing wage increases.
I gather from considerable media that there was quite a bit of use of that in professional services firms and making up for circumstances where they had employees agreeing to lower wages and things turned out to be considerably better than they were
Yep.
thought to have been, and the use of bonuses may have also been attributing to that.
That, yes. So I must admit, at the beginning of the pandemic, we had a lot of discussions with members about wage reductions, particularly for managerial and professional staff, which might have been also accommodated by a reduction in hours as well. And the RBA has noted, and we've identified this in our submission, that there's still a significant body of organisations that are still have wage freezes in place in that respect, and bonuses can help offset the impact of those without necessarily, once necessarily committing to an ongoing increase. And ideally, what you want businesses to do is have the confidence to commit to an ongoing increase. So I'd be cautious about reading too much into the bonus element. In our view, it suggests a lack of confidence rather than increasing confidence. When you have increasing confidence, you commit to higher wage growth ongoing. Turning to a system of fair wages and conditions, we believe that in the current environment, a fair system of wages is one that protects current jobs and encourages job creation. We do, of course, note that fairness is a relative term, but given the events of the last 12 months, there's a much higher priority by workers, I think, on maintaining employment and increasing their hours of work than in securing any pay increases. And in terms of small unincorporated businesses who are those most affected by this decision, we don't believe that a state minimum wage higher than the national minimum one is one that, in our view, is fair. We do note Unions WA and Minister's comment regarding our example about the local takeaway, and note that outcomes do vary depending on provisions of relevant awards, e.g. whether you're comparing the restaurateur and catering work award against the national hospitality or the fast food, they do give you different outcomes. And as the Minister's identified, there are differences in casual loading, but there's also differences in overtime provisions, penalty rates, allowances, district allowances, which all impact on individual comparisons. On an overall basis, it's the view of CCI WA that the state IR system is more prescriptive and less flexible than the national system, and is not designed fundamentally to take into consideration the needs of small businesses employers and their employees that dominate the coverage with respect to the private sector. Although, having said that, we note that our views on the state IR system and the need for a reform and how that reform should occur is not a matter for consideration as part of these proceedings. But we do come back to the same question: is it fair to have a state minimum wage which is higher than the national minimum wage, bearing in mind that some of the historical reasons for why we have that increase, and whilst we know that it's decreased over a number of years, that it was as a result of the growth of the resource sector back during that resources boom. We are fundamentally concerned that we might end up in a similar type of situation if we just simply look at how the mining sector is contributing to the WA economy.
I mean, that differential now has gone from $25 in 2014
Yes.
to the differential now of $6.20, so quite a marked change.
Quite a significant change, and we do note that, and certainly we consider that to be a significant improvement to where it was in 2014. So we do recognise that. So we do believe that fundamentally in the current environment and where there is significant uncertainty, and particularly where we're seeing significant variation in working hours, employees are working fewer hours than what they had prior to the pandemic. We're seeing that by way of increased part-time employment over full-time employment. A fair system is one that promotes employment And
Is
reduces.
that about recovery though? Is that because part-time was hit hardest and it's recovered the most? I understood that to be the effect of Mr Christmas's evidence.
Well, I think there's a variety of reasons we're looking at part-time jobs have recovered, yes, and full-time jobs haven't recovered to quite the same extent.
The latter being more affected than...
Yes, so the full-time being more affected than part-time.
No, I mean that Mr Christmas was saying part-time was first more affected and therefore it's recovered.
And has recovered at a quicker rate. If we're looking at, and so once again I was looking at the February data, not the March data, so we need to look at the comparison of that. There were more part-time jobs so the growth in employment overall, and April seems to have contracted that a bit, the growth in employment overall was increased number of part-time jobs, so not just recovery but increased. And our view on that is that where employers are prepared to take on new jobs, that's increasingly a commitment to taking a part-time or casual role on rather than a full-time role. And that comes back to the certainty that an employer has in able to provide hours. Where employers are less certain to be able to provide those hours, then they are more likely to offer employment which has greater flexibility in those working hours. And that gives you that numerical flex. Yeah, and we're also concerned about the risk of employees' working hours being reduced further. In meeting the needs of the low paid, we do notice that Australia has the highest minimum wage of any OECD country. In 2019, it equated to $12.60 US in purchasing power parity, sitting above Luxembourg and France, and of course well in excess of New Zealand and the UK. In the context of minimum wages internationally, it's quite clear that both the national minimum wage and the state minimum wage provide a high minimum standard of employment. And that's before you start taking into consideration the impact that the award system has on providing other greater minimum entitlements as well, that not other jurisdictions or all other jurisdictions enjoy. We also note that the state wage case decisions also continue to outpace inflation, resulting in net improvement in standard of living. So we note that the state minimum wage has grown by 13.7% since 2015, whereas inflation has grown by just 5.2%, and wages by the wage price index has moved by 9.8%. It's a clear sign to us that state minimum wage has delivered ongoing improvements in the relative living standards for low-paid workers. And we believe that it's open for the Commission to take that growth into consideration as part of an ongoing trend. I do note that Mr Christmas identified that he did raise a risk about wage growth, minimum wage increases above wage price index for an ongoing period of time. We do see that. If we're looking at those figures, minimum wage most certainly has outgrown increase through the wage price index. Once again, that is a cautionary note for us as well. We also note that the WACOS cost of living report demonstrates paid employment is the best option for meeting the needs of the low paid and contributing to improved living standards. Consistently, the WACOS report shows that people in paid employment, and including low paid employment, have a much higher living standard than those who don't have work or don't have sufficient work to meet their needs. And that is an important element. The challenge for WA workers is the number of available working hours. And whilst we recovered from the substantial loss of employment early in the pandemic, as I've noticed before, we've seen an increased growth in part-time jobs with a decline in full-time. And the number of hours worked and the proportion of employees who are working fewer than their usual hours remains subject to quite significant fluctuation. The challenge, therefore, is to retain working hours And I think that was highlighted in the case study that WACOS provided in its submission. Our concern is the higher minimum wage is of little benefit if there are few working hours to maintain the standard of living that workers are seeking to achieve. In looking at capacity of employers to bear costs, we note again that the industries most likely to be affected by the sector are those which are most affected by restrictions and lockdowns, and it continues to be a significant threat. We've identified in our submission that our calculations is that the lockdowns that occurred in January and February and then again in April of this year cost the economy an estimated $590 million. And the overwhelming majority of the revenue lost by businesses as a result of lockdown is not recoverable. So in the case of, based on our survey, retail sector expected to be able to recover perhaps around approximately 9.7% of lost revenue. Hospitality 13.6%. But as I noted before, that doesn't take into account the losses incurred in the first instance through wages, fixed costs, perishables and the like that occurred in the initial lockdown there too. And whilst faced with this uncertainty, employers will also be increasing the cost of superannuation contributions to their employees as well. This is a direct cost to employers, and it is something that forms an important part of an employee's overall remuneration entitlement. The fact that it's contributing to their income once they retire is not something that we think should be discounted. Okay? It's an important contribution and it's a cost to the employer now, and something that will provide ongoing benefit to the employee as well. So we do believe that it's appropriate for the super increase to be considered by the Commission in that matter. We do note the growth in apprenticeships, but we highlight that the key purpose of a lot of those subsidies is to increase employer uptake of apprenticeships and traineeships. And it's absorbing the demand that the employees have in wanting to take up those opportunities. In essence, taking up an apprenticeship or a traineeship is a worker's investment in themselves and their capacity to earn greater income through skilled employment. And one of the things we are very cautious about is anything that weakens that incentive element for employers to continue to uptake their skills in apprentices and trainees. In conclusion, we believe that maintenance of the existing statement of wage and award rates at their current rates is appropriate in the current environment. Take into account the high state minimum wage and the challenges faced by those employers who will be most affected by this decision. And to reiterate once again, we think it would be unfair for the workers and businesses in these industries that face a significant increase in wages based on the strength and dominance of the WA mining sector. We do note in our submission in reply that if the Commission is to increase wages, that it is our view that there should be a deferment on the operative date. It would be our view that it might be better to discuss operative date as part of the proceedings in considering the impact of the annual wage review. We note that the annual wage review is also going to be taking into consideration the issue of operative dates as well. So our view is that that's a more appropriate time to debate that matter. But our view is that there is one that there should be a deferment. So any increase shouldn't be from 1st July, it should be deferred for a later period. With respect to the reports provided with respect from that the Fair Work Commission has generated, we do note that most of that data is national.
It is.
A lot of the data that is in there has been replicated in our submission and the Minister's submission as well at a state aggregate level too, so we'd refer to those points in that. One of the highlight elements is the consideration about the growth of the economy. It does note very particularly the fact that the economies are performing state economy is performing quite well, with the exception of Victoria. And the report does note the greater impact that the pandemic has had on Victoria, given its more sustained elements of lockdowns and restrictions. And that highlights the concern that Mr. Christmas has about the biggest risk to the WA economy is being ongoing or longer term restrictions and we would add perhaps even more frequent short-term restrictions on the economy. So our growth is there. We are starting to recover, but our concern is the foundations aren't as strong as they should be. And just as a final minor point, Mr. Errington has reiterated the question or concern that Treasury raised about payroll, jobs and wages data, that not all small businesses are engaged with that with a single touch payroll. In considering that, we'd also note that small businesses are in those industries that are more likely to be affected by restrictions than larger organisations are. So whilst it's not, you can't necessarily draw a parallel to what that might mean, it is, I think, relevant for consideration. If it pleases the Commissioner Court session, that's our submission.
Thank you very much, Mr. Smith. Thank you. Well, it's 5-1. Should we break now, Dr. Diamond, rather than get you to launch off for 5 minutes? And
I wouldn't want to stand between anyone and lunch, so.
Yes. Very wise decision, if I might say so with respect. All right, we'll adjourn now and resume at 2:15.
We stand adjourned.